So you're looking to sell a UK property and you're a non-resident. What capital gains tax do you need to pay and when? Check out this video as we go through all of the essential details.
Welcome to our Optimise channel, which is all about saving you, property investors and developers, income tax and capital gains tax and all other taxes here in the UK, and also helping you file your tax returns. Need help for a US tax position? No problem, just hop over to our Purser Tax YouTube channel. That's where we'll help you for that. Hello, I'm Louise Misiewicz.
And I'm Simon Misiewicz. And if you are interested about how you can make more money and reduce your tax in regards to property investing and development, then you should join us on the Property Expert panel, which is the first Monday of every month. There will be a link appearing below this video description for you to register for next month. Now, I do need to talk to you, however, about capital gains tax. This is a tax that you will pay when you dispose of your property investment. Now, we have written a detailed article for non-residents that sell property in the UK. That should be appearing just above Louise's head right now. The link is also in the video description.
So what makes you non-resident and therefore applicable to non-resident capital gains tax? Well, basically there are two scenarios that could cause this. Firstly, you may never have been resident here in the UK, but you own rental property. It's at the point when you sell that rental property whilst you're not resident here. You could indeed also have been a resident in the UK, but at the time you sell your UK residential rental property, you're not resident here in the UK. So I think the best thing to do is to walk through an example. Let's have a look at a property that was purchased for £150,000, and at the time it was sold for £200,000. That results in simple numbers to a gain of £50,000, and that gain is going to be subject to capital gains tax here in the UK, the rate of which will most likely be either 18% or 28% of that £50,000. Let's imagine though that you're non-resident at the time that you sell it. Well, now you have a choice. You have a choice as to what gain you get to show on your tax return and therefore how much tax you pay. How is that possible? Well, the reason it's possible is because of UK legislation. If you owned the property before the 5th of April 2015, in certain circumstances, you can elect to ignore any of the gain that occurred up to and including that date, the 5th of April 2015. How great is that? Now, the issue that you need to think about is it won't always be applicable, but let's just assume it's going to help you on this occasion. So, when you look at the amount of gain that occurred prior to the 5th of April 15, you find that £30,000 of that £50,000 was attributable to that date or earlier. So, guess what? We get to add that as though it is part of your expense to buying and owning that property. So that means, in effect, your gain now drops by £30,000 to just £20,000. Your costs theoretically have gone up £30,000 and your gain has indeed come down by £30,000. Now that, of course, is going to be taxed under capital gains tax, and just as though you were UK resident, that tax is going to be either 18% or 28%. So, being non-resident at the time you sell a rental property you owned way before perhaps even April 15 could save you lots of tax.
Just a quick question for you, Louise, and I know you're going to be talking about residents or UK residents that have left the country, sold a property, then come back. There is something that you need to stay on this video for because it's really important. But the one thing you mentioned about is the cost base going from 150,000 to 180,000, which is a £30,000 increase in the valuation. Can I just write myself a note to say this property increased by 30,000 in that time and then slap that into my tax return and save myself a pretty penny?
Wouldn't that be great? And the answer, as I'm sure you're not surprised to hear, is no, Simon, you can't do that. You're going to need to bring in specialists to help you evaluate what the property is worth. There may even be a need to do some historical assessment as well of what that value was back in April 15. But there are solutions, and you're going to have to work through them thoroughly and diligently with specialists who can help you. Specialists such as accountants and potentially also surveyors.
Now, as you quite rightly said, there's a lot of information on this video. The one thing I do see, and this is personal observation, is that people pay far too much capital gains tax as a non-resident. And the reason for that is because they do not take into all account the costs. The cost I'm talking about here is the cost of the building itself. When people do a CGT return, Louise, I tend to find that they put the capital cost of the building from the conveyancing, and then that's it. But did you know that you should be adding into that the legal costs associated with that conveyance, the mortgage fees that have been charged, the capital costs that you may not have offset against your renting income? Those are capital costs that can help you reduce your CGT bill. All of those items, and indeed any kind of capital extensions as well that you do afterwards, are costs that can help you reduce your CGT. So it's vitally important for you to ensure that you include all of your costs. Rest assured though, we do have a capital gains tax calculator which, for the sake of £10 of a price tag, can help you minimize the cost of getting it wrong. So make sure you head over to the URL appearing above Louise's head right now and in the video description for you to pay and download your own CGT calculator, which has been left up to date.
And if you're liking this video so far, please smash the like button, hit the subscribe button and press on the notification bell so you can stay up to date with all the latest tax treatments and tax opportunities.
And if you do indeed have a capital gains tax liability, you're not sure how much tax you want to pay or indeed what to do next, then don't worry. You can book a tax consultation with us using the code YouTube25 to get your 25% discount off that consultation. Don't forget that there is something I said earlier about non-residents, and particularly if you've left the UK, sold the property on the hoof to get the tax advantage, there is a particular problem. Louise, what is that problem?
So, as you would expect, HMRC don't give these kinds of reliefs easily, and the legislation is very clear that if you are considered temporarily non-resident, then potentially all that lovely capital gains tax you've just reduced by being non-resident fritters away, and you end up still picking up the original capital gains tax bill. So it's really important to know whether you are going to fall into the conditions that make you simply temporarily non-resident, because everything we've just described won't work for you in those situations. So as always, beware, take good advice and double check the legislation to make sure you know how not to fall foul of it.
So as a non-resident, or indeed anyone now selling a property in the UK which is residential, it does require you to go onto HMRC's website and report that capital tax disposal. You not only have to report the disposal within 30 days, you also need to pay your capital gains tax. So you now need to estimate the tax liability. Now, you are not going to be sure, especially if you are in the UK and you've got taxable income and then leave the country. You've got all of this kind of extra baggage. Well, how much money is attributed to the basic rate tax band of 18%? How much money is going to be allocated to the high rate tax band of 28%? That can be quite confusing. So you do have to use our calculator to make sure that you pay as little tax as legally possible. However, if you have under or over paid your tax liabilities, then you would need to make those adjustments on your self-assessment tax return. Now, what I wouldn't want you to do is purposely underpay your CGT liability, because HMRC can slap penalties if they think that you're trying to defraud them. So do be careful, do get professional advice to save yourself that headache. Now, we have created a video all about the 30-day reporting. Again, that URL should be appearing above Louise's head right now, but also in the video description. So go check out that video of how you can go about reporting through HMRC's own portal.
So, not just talking about HMRC's portal, what about this one? Again, please smash the like button, hit the subscribe and ring that notification bell if this has been helpful and you want to see more.
Until the next time we see each other, my name is Simon Misiewicz.
And I'm Louise Misiewicz. Thank you for watching.